Weekly update of the dollar index, gold, Bitcoin, crude oil, sugar, coffee. I'm Rich Potts for Critical Point, and it is Wednesday, February 5th, 1:43 p.m. Eastern Time. Let's start with the dollar. Weekly chart. Probably placed a level one bottom last week, but look how they slammed it up this week, slammed it down this week. Model saying we better be a little careful of that idea. Probably won't bottom for level three, which is it's kind of like the pops and drops during a month, the biggest weekly moves week to week. I think the dollar might be a little bit lower next week, but I'm not coming up with ideas that it's going to be drastically lower. And the model's still saying keep throwing darts here. Keep looking for a level one bottom for the dollar. Now, with any kind of a bottom with this type of modeling, okay, the lesser important bottoms will align. So like all the hands are at midnight. So with a level one bottom, we're going to get a level two bottom, which is the second most important fluctuation during the year and occurs twice as often as level one. Then we have a level three, also third ranking of importance, and it occurs more than three times in a level one. It's basically a monthly buy-sell signal. So we've seen a monthly sell signal this week, looking for a buy signal next week. The market may go lower than last week, but whatever the next level three, probably due next week, maybe early next, but the following, but likely next week. That should trigger the level one and put the market higher into a level two, pull it back, higher still into a level one into summer. Now, it is allowed to trade sideways, but we can come up with various statistics, data plugging into this, that I have to go with the idea there's a chance for a move higher in the summer. This really didn't pull off all that much from a level one top, and that was a correct target. Got a gold star for the model for price, but it also knocked it down from a level one top, so get a gold star timing-wise. So that's the best it can get is 2 gold stars. That's also how you can boost accuracy higher than other people, but that doesn't bother me. Okay? All right. So what we have is that the weekly indicator is closer to oversold. Its spread is wide enough to suggest chance for lingering near-term downside momentum. Well, the model's saying ought to consider chance it's going to take out last week's low, but the model's saying probably won't take it out by much. Now, for some reason, if they hammer this dollar in the next few weeks so that there's more room when it goes higher, then we have to consider maybe, just maybe, we've even seen a long-term top in the dollar. Whereas right at the moment, the model's saying it's looking more likely it can go higher still by summer for a little later. Minor long-term business cycle top, and it may be something far more important, but I'm not that concerned about that right now. Okay, so I must say this was kind of crazy behavior off of this dollar index, and it was related to Trump tariffs, but it's also related to domestic business. It's related to global relations of what's going on out there, not just for tariffs, but the economy and interest rates from country to country to country. And the ECB did lower their interest rates, and they want to push more, and there's discussion China can still do gigantic stimulus anyways, and a variety of things going on. Any rate, best scenario is this was a weird week. Got to be a little cautious of how to trust the forecasting from the model, but bottom line is it's probably bottoming now in the next few weeks, meaning it may bottom next week for level three, bounce for a week, pull down and lower still the following week. We can give it all the way to the week of March 3rd for the latest allowed for this level one bottom, but been favoring earlier rather than late, favoring it bottoms in February. All right. So still looking for higher for the dollar index. And if it starts moving above 110, the dollar index, I think that's going to be a problem for the stock market, maybe for the U.S. economy. It may also link to tariffs, inflation, and then it's going to have to relate with interest rates one way or the other. Now, it looks like the dollar has been far more aggressive. It's almost like it's trying to forecast where interest rates are going, maybe even try to push it, but I think it's more forecasting. And then the bond market's still trying to do what it wants to do, but it's amazing the correlation here. And the dollar's been a little bit of a leader and just the more aggressive one than interest rates. All right, let's go to the gold market. And on the gold market, it looks like Wall Street still wants that magical $3,000 number. I've had targets for many, many months of near 3,000. It still looks like it's in an uptrend. It's still in the bull market, but we have to look for a level 1 top, and there will be level 2, level 3, but just like the hands at midnight, after they move past midnight, they start doing their own thing, don't they? But in a way, they're not. They're trying to have their own characteristic, take care of their own business, and yet they're still towing the line one way or the other over time. All right, at any rate, I am looking for a setback next week, but I'm thinking it can bounce higher some of next week, then down. Also, the level 1 top does not have to occur the week of March 3rd, so it's kind of in line with dollar and a few other things we're looking at. So it can go higher and higher and higher, but when we get this level 1 top, we need to consider this might be the first opportunity for a minor long-term top, and gold can back off for the rest of the year. Okay? Now, I have alternate scenarios suggesting there could still be another opportunity to push gold higher later this year. Maybe it has something to do with higher in the summer. And notice how the dollar has rallied, and we've had gold rallying, and the inflation's been coming down, but still, it's an odd one, I must say, for this bull market. We still have good central bank buying, from what I understand, and the speculators there. Now, the gold bugs are always there, so you kind of have to discount them, yet you should not, okay? At any rate, it looks like this also, gold is competing quite well against Bitcoin as being something of maybe gold can be a little more of a safe haven. I think it's obviously an alternate currency. There's a variety of things to do with gold, and all I can tell you is the trend is up. It looks impressive, looks great until it's trading below the low of this week, and this is the futures market, but I'm guessing cash is about the same. Until we get some sizable downside, get 1 or 2 weeks down, we just got to give it a chance that the trend is up. In other words, I'm not trying to be a timer here. The model's not trying to be a timer here. It's saying, let's give it a chance, see if they can push it some more, and then the model hopefully will become more aggressive and help us time it and call it. But as a backup, the model's just saying, like, if it goes below any weekly low, if we get like a sharp negative reversal, they slammed it up, slammed it down, and closed it down for a week, that's probably a sign of a level 1, but we also have to consider what if it's something more important, to far more important, okay? All right, and frankly, I think gold's kind of high valued, and I don't really like gold. I don't own gold, but I like watching it. I like analyzing it. Did a lot of it trading 20, 30 years ago, even in the middle of the night, 2 a.m. in Singapore and Korea, Hong Kong, I forget now. All right, at any rate, this is the Bitcoin, and this is sloppy. It's not working well. It's unsure. It's concerned the stock market's going lower. It's concerned the economy's going lower. And then here's all these Bitcoin crypto people telling us this is the greatest thing. And they are admitting it's not a safe haven probably, but they still think it's a store of value. I don't even think it's a store of value. I think it's just a gambler's market. It has nothing to do with anything. But they try to correlate the best they can, and I think technical analysis actually does a better job keeping up with it than any kind of fundamentals, because I don't think the fundamental connections are there. I don't think the economy connections are there. And if they are, it's no different than all the other stuff. If things are going bad, they're going to sell Bitcoin, all right? They like the U.S. dollar, even though they tell us they don't, and they're at war against all the central bank currencies and the fiat. Well, crypto's nothing but another type of fiat, except it's in the private sector. Now, they're also hopeful that Trump will rob the taxpayers of $100 billion and slam it into crypto reserve, and then that's going to help all the speculators make some money, and it's mostly just going to help the crypto millionaires and billionaires is about all it's going to do. I think it's all a farce, okay? But at the same time, this crypto stuff is here to stay. And so it can, over decades, become somewhat of a valuable thing that we need to do a little business in and keep it in an investment portfolio. All right, at any rate, this looks like a half pattern to an L2, so I'm assuming the market's going to bounce a little bit in just the next few weeks for an L2, but then it's going down to an L2, and I'm concerned something's been missed here. The model isn't keeping up as well as it has in the past. I think it's done a fantastic job here, real time over the past, 5-7 years that have been doing that in crypto, even though we have history going back much farther than that. I really wasn't watching, didn't pay any attention to it. And no, I was even told by a youngster that I better load up on, I think back in 2017, 2015, somewhere's in there. And I really thought about just buying a little bit and just forgetting about it. And yes, I do wish I'd done that. But today, I don't think you're going to make gigantic sums out of these cryptos in coming years or decades, okay? And it's still vulnerable to a 90% crash, in my opinion. And so, doesn't mean it'll happen, but that might be what will be needed. So afterwards, it doesn't become such a great investment and trading vehicle. Well, it might be a great trading vehicle. But the point is, that might be that it then becomes a real currency and accepted more after we clean some things up here. All right, at any rate, for those of you that love making so much money out of crypto, you really don't want people. You don't want everybody involved in it, and you don't want it being become a real business thing and a real currency, because you're down to much smaller returns is what's going to happen. All right, any rate, and what I don't understand for those of you who are so gosh darn bulled up on it, and we old fogies aren't catching on and this and that, to me, we can create all the cryptos we want, so therefore we can create all the money we want, but it'll be private sector, so to me it will never, ever be real money. But I realize that if you can get enough private money flowing around, it's kind of like just a private bank, I guess, that can circulate around. It can work, okay? Any rate, it's supposed to go higher. I don't trust it. I think it wants to go sideways to lower, and I don't trust it in relation to my stock market forecast, and I'm not positive on the stock market right now, and maybe not for a long while. Let's go to crude oil. Or let's go back to the Bitcoin, give you something a little short term there. The model is saying that it's very tricky. That could have been a level 3 bottom, top. It's going lower next week and up. The better forecast, but only slightly better, is this is a late level 4 bottom. It should go higher next week and perhaps into a following week and then down, and therefore it could have more upside, and I honestly don't know. And you'd have to zoom in on the daily and intraday charts how to trade it. I don't trust the upside, frankly. I think it's going sideways to lower in the next level too, but in theory, it's going to pick its head up. What will do it? All right, crude oil. This one peaked level 1 later than we'd like, but it was in parameters, seen it before, so the model didn't crash or burn or anything like that. Get over it. All right, coming down into a level 2 bottom. Does not have to bottom until March 10th. Seems too late to me, but it looks like these patterns being long drawn out now. The timing's very slow now. I think it's because they're trading slow because there's so much oil, and then Trump's telling them, you got to get this price down and help out here, and you need even more oil to do that if you're a true free marketer, so get going. They don't want to get going. Study the drilling, study what they can make, and sure, they'd love to get their hands on leases for future drilling. They don't really want to drill now. They don't want any more oil. Okay. Now, Trump is supposedly going after Saudi Arabia to help out, therefore make OPEC help out if they can. I don't think it's going to work that well. At any rate, I think there's more downside coming, even though we've met minimum requirements for a bottom. Look at this technical indicator, my favorite indicator, 532, slow stochastic, widening spread, left mid-range. This is bearish, bearish, bearish. Now, I've seen that darn thing turn on a dime, a V-bottom. But I think we better assume lower to go. And the model is saying last week was probably a level 3 bottom, so a monthly type sell signal or buy signal. Sell signal this week, and since it didn't rally well, I'm guessing the level 3 trader, and there is such a thing as a level 3 trader, a group of them, just like there's level 2, level 1s. They don't specifically trade those trends. Most of them trade multiple strategies and tactics. At any rate, my guess is most of them got stopped out and it didn't work very well for them. I think oil is going lower into next week. Then it's going to bounce for level 3. Maybe it bottoms for level 2. I'm just suspicious it may take a while. It's supposed to rally into a level 2 into late March on into April. I do think it can be stable to higher into Memorial Day. Does not have to stay up into the summer months for driving season. For that matter, neither does gasoline futures, even if we got a strong driver season. I don't think we're going to have a strong driver season. I think the American people are laying low and spending less, and I warned them last year, if you don't like where we're going or the direction of the country, and I met more of the MAGAs, start cutting back. Cut back 10% of your purchases. You need to lose weight anyway, so cut back on food. Help kill inflation. Slow the economy down. Be a dematerialist, anti-materialist. Okay, hurt the economy to shake these people up, shake business up. All right. By golly, I think that's working, but not really. From my perspective, it's just people just uneasy, want to play it careful here, and they're racking up too much credit card debt. We've got auto loans with problems now, credit cards with problems now. We've got some real estate out there with problems. We're producing too much real estate. We've been betting, speculating on real estate, and I wrote about that, and just 2 days later, the head of China come out and said, people should not be speculating on homes. Homes are for a living. And I believe that, and to me, there's a gigantic amount of homes and apartments owned by nothing but big Wall Street firms, billionaires, and yes, the little investors invested in those. Maybe some of that's private investing, they may not be, but it's really just out of whack. I'm glad they did it back in the financial crisis, 2008, 2009. For the next few years, they soaked up some of those homes after that. But now you can just see the middle class and poor are constantly pushed into a rent economy. And rent doesn't mean rent like apartments, but it ought to. It means literally we are leasing, renting everything. We own nothing, frickin' nothing, all right? And we're stupid for being that way. Unless you can play a game of let the rich own everything till they get so darn rich that we then kill them and take everything, then you might say, so who cares which way it goes? We're going to get it in the end if we really want or need it. I'd rather fix the rental economy or rent economy and put some things back in the middle class and poor. All right. At any rate, that's the crude oil scenario. I think a bit more downside, struggling higher. It is in long-term valuation, so I'll take a moment to look at that undervaluation, but I don't know how much that really matters. If I can find my oil chart, there it is. This green I set up a long time ago, way back in there around 2023, and said that ought to be some kind of undervaluation. It can become more and more undervaluation, cheaper and cheaper, more oversold on the charts and technical. But I said, this is prime territory where those oil producers are going to do their best not to beat up at their own price. Well, look at this. It should be bottoming now in the next few months if it didn't bottom there. And I may learn how it's going to bottom much later than I think late this year. But I think it's time to assume it is trying to work up out of this. I think it's going to be limited if you look at today's supply and Trump likely being able to pressure him a bit. So I think it's a rather limited up move. It's not going to do a whole lot. And the bigger up move may be next year because it does not have to top out for the next long-term move until next year, okay? And I do think we're setting up for higher inflation next few years. It's just a matter, is it up a little? Is it up a huge amount? But you better run for cover if it goes above 3.5%, in my opinion, although you want when that happens, you want to get my latest assessment because maybe I'll be at a time of a top and it's just going back down. But I'm generally saying if it's above 3.5, it might as well go to 5 to maybe 13. 13 would probably be even higher than 1970s, not looking good. And in the early 1800s, several times this country had 20% inflation. We didn't even have that in the 1970s when we ran interest rates up to 20% just to kill inflation at about 10 to 13 or 12 or whatever it was. All right, at any rate, next up is, so anyways, I'm very proud of this undervaluation. I have this for corn prices, and it's actually worked. We might have a once-a-decade bottom in the corn market, and it might go up 100 to 400% is the history since 1800, and that's kind of strange because on a per decade basis, the stock market goes up 100 to 400%. Isn't that wild? And then both of them come down quite a bit, 20 to 50%. So, all right, let me swing over here to my commodity list. We'll pick up sugar, coffee. Someday I probably will split these commodities out again and put them in their own separate podcast video. All right, here's sugar. It's working for me. It's working for the model. Hopefully it's working for you if you're trading it. Level 1 up move, but it can top out in just a few weeks. Then we need to see how it behaves on the way down into a level 2 bottom. Is there still lingering supply out there? Knock it all the way down. Is something turning more bearish fundamentally? And if we could get that pullback, then if it takes out the level 1 high, that's a ready, set, go pattern that I like that could help me get off the fence there and be even more built up, and maybe the fundamentals will be changing by then. Weekly indicator looking very bullish, suggesting a few more weeks, 1 to 3 weeks upside at least, but it is approaching overbought, warning us, hey, you better pay attention to the model. The model's saying this buying does not have to last forever. It may even top this week, and I think if you see a weekly close below the low of this week, not a good sign. A down week from now, on in towards the end of the month, probably be a sign of level one top. So I think the up move's kind of limited here. I like it, but I also think this level one bottom is probably a long-term bottom, and I'll discuss that in a moment. But first, let's go over to coffee. So in the coffee market's just exploding. We finally are heading towards a blow-off long-term bull market. I mean, they've been working at this for years, it seems like. They finally got it. They're going to get it done. Is it going to be like cocoa, gigantic record highs and all that? I seriously doubt it. And it'll end badly, just like all bull moves do, especially in commodities. At any rate, it's topping out probably in the next 2 weeks for a level one. Now, normally I'd love to say that's going to be a long-term top because it's due to come down to long-term bottom. The problem is this level one top is occurring after the end of last year, and the model was saying you should not have a long-term top this year. It should have been last year. So this is something new for me. I don't think I've seen in over 100 and some years of coffee. I actually have charts going back to 1700s in coffee, I think. And at any rate, this is something new for statistics. I warned of this. I talked about this for months. I don't know how good I'll be and useful on long term because I don't believe it deserves to just go higher in the next year. And that's what it's saying by taking out last year's high. As of this year, it's saying it ought to go higher into 2026, maybe even 2027. And it also suggests prices can remain somewhat high all the way in the next decade. So that's really weird. Now, I've been thinking for some time, climate change is going to get caught up with coffee and create a big move someday, and someday probably a big bear market. And it's here. It's working. I'm glad I kept coffee on the list. I may drop it someday. But at any rate, it's due to set back for level two bottom, and I just realized I did not put that in. But probably a bottom towards the end of this month on into mid-March, set it back some. And then we'll reevaluate. If it goes higher for the next level two above the level one, that's going to say prices are going higher even in the May, June. So this is really something. But for me, just like cocoa, if I'm out, I'm not going back in unless I'm a day trader, intra-week trader, maybe a level three trader, but I'm not trying to buy and just set out. Now, I will say if you could get in on a short-term bottom and then get a new high, if you're willing to just blow all the profit and maybe even still have a loss after blowing through that profit, but a limited small loss, in other words, very, very slow at raising a stop and trailing it, then you can become a trend follower and then just hope and pray it goes up forever and just keep trailing. And eventually, though, you've got to make a decision how to run that trailing up faster so you can capture a bigger portion of those profits. Trend followers normally give up quite a bit of the profit and also have a larger loss. But they also can write out things better and longer than a lot of the timers and the more detailed fundamental technical people, okay? They can latch on to several bull markets in a row and they never got out because they were just simply never stopped out. And then they wind up making a gigantic amount of money that the rest of the gang didn't make, and the rest of the gang was supposedly smarter and working harder at it. That's the difference between trend following and timing. Weekly indicator is overbought, warning us that, yes, we want to look for a top, and it's wide enough spread. However, maybe lingering momentum next 1 to 3 weeks. I think this thing's getting close to setting back for maybe only a couple of weeks, but I think it's getting close to setting back. I think it's kind of late to buy it. To me, it's becoming a very short-term trader's game, and that's all it is a pure game. Now, at this point here, I don't care if I'm not a genius and don't do well and don't help you that well. All right, here we go. Hopefully I can help you on the intermediate to short-term stuff. All right, here we go. For the monthly chart of the sugar, this can be a long-term bottom, better than this. This was ahead of schedule. Met our price yet again. Get a gold star for price. Now we get gold stars for calling it. I am calling it. Long-term bottom in place. Sugar's going higher into later this year, maybe on into next year. However, I'm not as bullish as I once was. I don't know what to really make of it for upside, but it could be quite the exciting move. And if I could ever be comfortable with a tiny position, I'd like to own sugar and just sit still and then focus on all my other commodities and my stock market. But right at the moment, my problem is I always seem to have to load up on commodities, and then you get yourself in trouble that it's easier to make money out of the stock market, and lots of it. All right, at any rate, here we go. I think we're on our way for a long-term bull market. And sugar, I don't quite have the fundamental information I think it's going to be something that just comes in over time. This is the monthly chart for coffee, and not only should it placed a top in December for level 1, but minor long-term, and mid-size, but even a major long-term, it wasn't supposed to go higher for many years yet, and here it is moving higher. Now, this could be just a weird fluke that it went up just a few months longer. After all, these patterns, some of them are a decade long. You're telling me you're going to trash my analysis here just because it went up a few extra months? And it is still due for a minor to even mid-sized long-term bottom, okay? So it should pull back something like this, but I don't think it's pulling all the way back anytime soon, and it makes me nervous. The next year is just going to be higher still. Do we have additional crop problems coming? That way may be what I'm missing. And it takes longer. They don't, the very next year, or even 6 months later, they don't get a new crop like we do in the grains, okay? It takes a lot longer, all right? And demand may be getting better relative to the economy, but I don't trust the demand side in coffee. To me, for the first time in 20 years here, I cut back my coffee consumption, drinking a little tea. I don't know. I just don't trust the demand. Nevertheless, this is one hell of a bull run. If you want to go for it, great. I'll see if I can come up with some targets along the way here for additional upside. It is overbought, suggesting it's long-term overvalued, it's high-priced. But it doesn't really necessarily matter right now, and the spread is wide enough that it's suggesting chance for lingering upside momentum next few months. That's the coffee story. And by the way, commodity indexes should work higher in the summer. They may work higher much better if we get much more inflation and tariff stuff. I'm thinking that may wait to next year, however. I'm not convinced we're going to make a lot of money out of commodities in general, but I think commodity indexes are moving higher into summer. Now, if you can pick the stronger, better ones, you'll do even better. And there might be some laggards that go up, but be cautious. There could be laggards going down, and also be cautious. All this tariff stuff can come back to bite the commodity bulls. We can actually destroy demand here and the economy with these tariffs. Go back and read the 1930s tariffs. Thank you.